Greetings and good day. I hope you're doing great. I'm here with you for the daily analysis of the EUR-USD currency pair on February 27th. We are currently reviewing the daily time frame. As you can see, since the beginning of the—
Do you know why your profits are smaller than your losses? Because you don't analyze your trades, you just execute them. Download the Trading Journal app for MetaTrader 4 and 5 for free now.
week, we've witnessed more than 0.5% fluctuation in the price of this currency pair. And at the moment, the weekly candle is in a bullish state. One of the factors that has led to the limited price movement of this currency pair is that the dollar is in a state of anticipation. This is because the tensions between the US and Iran have prevented a strong downward trend for the dollar. In addition to this, the euro was traded without a strong catalyst this week, and the European inflation data have not yet been able to create a sustainable trend for the euro. We are now reviewing this week's economic news. As you can see, there hasn't been any news that could have a significant impact on this currency pair. As an important piece of news yesterday, Thursday, February 26th, we saw the unemployment claims report, which was released better than the forecasted figure. Later today, we will also have the monthly PPI and core PPI news for the US dollar. This news can't have a major impact on the dollar's trend, unless the released figure is significantly different from the forecasted number. In that case, we might see a short-term move from the US dollar. Also, for the euro, we will have the monthly CPI report during the day. Now, as an overall result, we saw this week that the euro was traded with more strength against the dollar. Today, the euro and the dollar were among the weaker currencies in the market and are being traded at close levels to each other. Given the uncertainty we observed as a result of US policymakers' decisions, we expected a further decline in the dollar. However, alongside these factors, the risk of escalating geopolitical tensions between the US and Iran and the potential outbreak of war have caused the US dollar to remain strong. We are currently analyzing the 4-hour time frame. After the EUR-USD currency pair reacted to the 4-hour FVG zone at the price of 1.1742 at the end of last week, it rebounded upwards. However, after the start of this week, it fluctuated within a specific range between the price of 1.1834 and 1.1767. You can see this week's trading range in this box, and we can note that the price has accumulated significant liquidity above this high and below this low. We are currently analyzing the 1-hour time frame. We can observe that the price has formed a supply zone and a demand zone this week. Each time the price has reached these zones, it has moved toward the opposite zone. And as long as there isn't a very strong catalyst for either of these currencies, we can expect the price to continue fluctuating within this range. Now, we are analyzing the AMD setup. As you can see, during the Asian session, the price formed a trading range, and after the London session began, the price moved upward, collected the liquidity above the previous session's high, and then returned to the previous session's range. In this way, we consider the Asian session as the accumulation phase and the London session as the manipulation phase. And with the start of the New York session, we can expect the distribution phase and a move to the downside. This setup can be suitable for a short-term trade. And considering that we are on the last trading day of the week and there is an increase in geopolitical risks during this period, I recommend that you manage your risk carefully and avoid holding open positions over the weekend. Wishing you success and profitable trades.